Today we have a very special guest, Dr. Christopher McKee, founder of the PRS Group. PRS is the world's leading quant-driven geopolitical and country risk forecasting and rating firm. Their firm's clientele includes the world's largest institutional investors, sovereign nations, transnational companies, central banks, and leading research scientists at institutions such as Harvard, Princeton, Yale, and LSE. Cited as a leading organization in investment risk analysis by hedge fund investor Jim Rogers, and as the most authoritative in the field by leading academics, PRS's risk-driven investment portfolios have produced returns of over 20% with less risk and volatility. Dr. Christopher McKee has been featured in outlets such as the Wall Street Journal, Bloomberg, CNBC, and has just written a very fantastic book I all highly recommend you check out, called Quid Perculum, Critical Risk in the Age of Technology, which he co-authored with Peter Marber from Harvard. Dr. McKee, thank you so much for joining us here today.
You're welcome. Nice to be here.
Awesome. So I'm going to put you on the spot right away. There's a lot of talk about what's going on in November, who's going to win the elections and how it's going to affect the economy. Based on your insight, what are you seeing currently in the polls?
Well, first off, there's a couple of things. If you look at these primaries, right now we're at a very, very early stage. And, you know, who's leading and who's not leading really isn't indicative of what's going to happen. You know, I did an interview a couple of weeks ago and somebody asked me more or less the same question, you know, where do you think this is going to go? And I said, you know, I remember back in '92 and I was still a student at that time. And the Democrats were doing their primaries, and it was February, and I was up in Montreal, and it was really, really cold, and it was a very sunny day. And I can't remember who the front runner was at that time. It might have been Gary Hart, but I'm not clear. But there was a guy named Bill Clinton, who I think was sort of in fourth place. Yeah, and he was in fourth place, you know, and he had a little sort of bushy afro, and he had a Southern accent. And he was just a governor from Arkansas. Nobody really gave him much hope. He did okay, you know. So I think what there's a couple of things I can say is, you know, you're going to have to wait a little bit of time. Nobody has a crystal ball. Super Tuesday is going to be huge here. And, you know, I watched clips of the Democratic debates last night, and they've got strong candidates. They really do. I mean, they're varied in their approaches. I mean, Elizabeth Warren is not a Mike Bloomberg for sure. And I'm really quite surprised at how much staying power Bernie Sanders has had. But he tells a good message, and I can understand where it's coming from. The thing you'll see, though, is right now they're all sort of staking out their territory. And you've got a Democratic Party that's not quite like it was even 10 years ago. There's a lot of, you know, disparate elements within there. And I think all of these candidates are looking for their support. But once it's decided who it is, and I honestly don't know who it's going to be, I have a feeling it will be a much more moderate candidate than what we're led to believe right now. But honestly, it's difficult to say. But nonetheless, no matter who it is, whether it's a Sanders or Elizabeth Warren or a Mike Bloomberg or anybody else, they're going to temper their policy positions, and they're going to be much more, you know, centrist in their approach, and they want to distinguish themselves. Sorry?
Why would that be?
Well, it's just the way politics is. You know, you have to stake out your ground in the party. You have to make those kinds of, I wouldn't call them inflammatory comments, but you have to make it known where your policies are, and you need the media attention. So, you know, you can say things about healthcare that may or may not work out in the long run, but, you know, one really needs to, you know, you can't be invisible, let's put it that way, and you have to play the media. But again, you know, you're not just, once you get that nomination, you're not just looking at appealing to a party base. You're looking at appealing to you know, the politically relevant sections of the country, and to do that, you have to, you know, temper your rhetoric a little bit and become a little more mainstream. Trump did it, Clinton did it, Clinton clearly did it, and I think that's been the history. So to answer your question in a rather long-winded way, we don't know. You know, who's going to win. But right now, once that Democratic primary is settled, you'll have a much different outlook. And I think Trump will be a very formidable opponent. I don't think it's going to be a slam dunk for a Democrat in any way.
So with that being said, I mean, you have people like Elizabeth Warren talking about really, really high taxes for the super wealthy. Do you think they will rescind some of those policies if they do win?
Yeah. It's as simple as that. It just doesn't work. I mean, up until those changes were made, let me put it this way from a business perspective. Up until the changes that Trump made a couple of years ago, the U.S. there was a lot of ways that you could reduce your taxable income, but on a corporate side, they had some of the highest tax rates in the world. Okay, and there was a lot of companies that were relocating overseas. Ireland with 12.5 was a favorite destination, and even Canada. I think Burger King relocated up there for a while. They had a much more favorable tax regime, at least on the corporate side, than the U.S. does. The difference is that there's an army of accountants and lawyers that we use down here, to make our tax returns as efficient as possible. So, I think once you start tinkering around with that, you're going to come up against the harsh reality of a very powerful corporate sector that does have options, that does have alternatives. And relocation is not such a difficult thing anymore. Right. So I don't think, once you start to tinker around with higher taxes, and if you're looking at a base in the Midwest or in those industries that, can't really absorb those kinds of cost changes, I think the rhetoric, or at least the inflammatory parts of higher taxes, will come down to earth a little bit. The U.S. corporate system is not terribly transparent. I agree with you, but I don't think higher taxes on corporations are really where it's at. I don't think that's going to fly.
Sure, because they could always move somewhere else then.
I think that's part of it too. I think there's other ways to raise revenue than dinging the corporate sector. That's all. I mean, you have to understand too, it's not just, the corporate sector is not just, multi-billion-dollar corporations these are also, smaller entities too, and medium and smaller. They pay the same rate, so they're getting dinged just as badly as anybody else. There are no real exceptions, as there are in Canada, for smaller companies on the corporate side. So, you can talk about raising taxes on corporations, but it's the same corporation that has 4 employees as does the one that has 5,000 or more. It's all the same.
And then in these big corporations, you have a lot of people, obviously, that are employed by them. So it'd be very scary if these corporations got up and left.
Well, I don't think they would get up and leave. It's just one of those things that you don't want to touch. They've been talking about it for years, and it's just really, it doesn't really fly. So, unless there's a political advantage to it, and there might be at some point, with some voters, there's different ways to raise revenue without attacking, corporations. And there's all kinds of ways. If you want to get into discussion on tax systems, I can certainly do that. But there's a whole world out there that does raise revenue without destroying its corporate sector, and it does so in an intelligent way. It's called consumption. You can tax consumption. You don't necessarily want to tax productivity or investment. That's not what you want to do, but that's a different story altogether.
Right. And you do a lot of consulting for very big hedge funds, like, say, Bridgewater, for instance. Mm-hmm. So how do you do your analysis when you look at, international politics? And how much of it is quantitative? How much would you say is qualitative?
Well, in the end, it's all quant-based, or it's all quantitative. We have a couple of proprietary methods that we've been using for a long time. We tweak them once in a while, but essentially the quantitative stuff is clear. We look at growth, inflation, budget balances, current account, debt flows, and so on. Those numbers are derived from a lot of publicly accepted and transparent figures. We do a lot of in-house econometric modeling, but on the political risk side, where those things are a little less easy to quantify, we do quantify the qualitative by creating what we would call risk bands. So in other words, if we're going to assess government stability, we'll come up with a couple of areas where, if you put into those areas what I would call qualifying criteria, you're going to get a much better idea of the relative risks. And we can talk about those a little bit later on, but the key is to ensure that bias, as much as possible, is removed, and that there's a sense of comparability across jurisdictions.
Got it. Yeah. And then how do these funds take this information and deploy it in their portfolios?
Yeah, go ahead. No, it's tough to say what they do, because everybody uses them differently, and those are also company secrets too. So nobody's really going to tell you exactly, but I can give you some examples. AccuVest is one of our clients, and they're out on the West Coast. And I remember reading an article in Barron's where they, took a look at their, I guess, country exposure, and they had a number of different categories. So they looked at value, they looked at momentum, they looked at risk, and a couple of others, and they buy our stuff every month. And I think their idea is to look at those countries that are becoming either less risky or that have hit such a rock bottom that they're really a bargain. So when you stack them up against, say, momentum and value and other parameters for making an investment decision, or at least an exposure to a country, that's one way, at least one firm uses it. We have a lot of sovereign wealth funds that rebalance their portfolios every month. And, they don't really tell me what they're looking at, but they phone me up and they ask for clarification all the time. And they say, you've got this number for this particular country. Why is that the case? And then we'll have a discussion, much like we're having right now, on why that is. And in most cases, they agree with it and say, okay, well, that's terrific. That's the insight. So again, I don't really know the ins and outs of every single client we have. We got quite a few, but I can give you some basic ideas. But, generally speaking, they input their data in their own trading models or their own, portfolios, and they use it as they do,
Got it. Okay.
Texts are coming in as we speak. I'm sorry about that.
Sure. Are they clients? Because we could pause. If they're clients, we'll pause.
No, we don't have to do a client call on top of this. It's fine.
Going back to Bridgewater,
Yeah.
Ray Dalio made an interesting point last year on 60 Minutes where he said, because of the current wage gap here in America, we are in a state of national emergency. Would you agree with that statement?
What do you think?
Personally, I would say yes, because whenever there's such a disparity between income, there's usually conflict when you're going back in history. I think the closest example.
Give me an example. And the reason I'm putting the question on you is that, you're from I wouldn't call it different generation, but you're a lot younger than I am. Okay. And I think that argument really resonates well with a lot of younger guys. It really does. So I'm asking you first, what do you think? Do you think Ray's got some credence there in what he says, or do you think it's just something that needs to be considered from a different angle, or perhaps is a little more nuanced than what he would say on 60 Minutes?
So my first intuition is, because it's Ray Dalio, I have to agree. It would be hard to disagree with him. But he gave some interesting points. He was looking back in history, and the closest example that he brought up was what happened in the 1930s during the Great Depression, and how there was conflict between the lower and upper class.
Yeah.
And he was drawing examples from that.
Yeah. Well, let me put it to you this way. I mean, I think the gap between, at least in this country, between the haves and the have-nots, it's increased. If you go and look at other jurisdictions, if you go into Latin America, for example, I mean, Mexico a long time ago in the 1960s and 70s had a pretty vibrant middle class. That's pretty much disappeared. Okay. So you have sort of a lower to lower middle class, and then you have some very wealthy individuals. The same thing I think is happening in this country. The problem is, in terms of looking at it, how would I phrase it? It's much easier to, making those arguments a year ago when, say, the market wasn't doing all that great in the end of 2018 or something like that, was probably easier to make. Everybody did really well last year. So I think even, the ones that come from, or people that are in a lower social stratum, tend to do okay. The other thing you have to figure out too, or at least put into the equation, is that we're in a very good employment situation in the U.S. Right. So, if unemployment were up in the 7, 8, 9% area, I think that argument would have a lot more resonance than it does now. I think inequality is out there, and I think it is something that has to be addressed. And I think maybe that's where a lot of the Democratic candidates are getting their fuel right now. But sure. I think you can address it in ways that are different from looking at simply wages. Okay, I mean, one of the biggest costs that most Americans, and I think this is where a lot of the inequality comes from, or at least it makes it worse, is in terms of some of the costs that we have to bear for, say, healthcare. I mean, it's very expensive in this country. And, Bernie Sanders made the point last night, and he's absolutely right. Apart from one or two countries, and I can't remember which ones he cited, the U.S. is really the only system, or the only country out there that has a purely, and I'm not talking about government entitlement programs, but a purely private healthcare system. Every other country either is single payer, i.e. the government, or has a nice blend, where its general provisions are applied by or supplied by the government, but an individual can insure for travel or something like that. The U.S. really doesn't have that, and those premiums keep going up every year. And this might actually get back to the question you talked about in terms of higher taxes. A lot of companies pay 60 to 70% of an employee's health care. And if you want to add to those operating costs by a higher tax burden, then that puts even more pressure. So, if you're talking about inequality, I wouldn't equate it to the 1930s. I think there's two things here. I think, the cost of living in this country, regardless of the employment situation and so on, is really high. I think there's ways to reduce those costs and reduce the inequality by reducing some of those out-of-pocket expenses. But the other thing I'll add to too, and this is, I think, important and I think this is where he's coming from. I mean, there's a whole generation of millennials out there that can't afford stuff. You know what I mean? Like, houses are pretty much out of reach for a lot of people.
Sure.
It's ridiculous, I mean, I remember when I was in my 20s, I thought prices were high then. I mean, that's just absolutely insane right now. And, there are, in Canada, for example, and this is one of the reasons they've tried to keep prices down, you cannot get a loan unless you cough up 25% now. That's crazy. I mean, if you're looking at an average house cost near Toronto, that's going to be $700,000 or $800,000. Where are you going to come up with $200,000? You know what I mean? It's a lot of money for a guy in his 20s or a couple that are just starting out. So I think that's a better way to look at it, is that, yes, there's inequality. Would I call it a crisis? No, but I think there's, you're really undermining a class of people or a generation that want to do things and realize things, and you're doing it for all the wrong reasons. I mean, I don't know if that makes sense to you, but I think he's right. I don't think you can equate it to the 1930s, but I do think that there is inequality, and it's growing in this country, and I think it's growing in parts of other parts of the world, but it's growing for reasons I don't think are essentially what was the case in the 1930s.
Would you say it's harder today to move up the income ladder? So as if you were in the middle class, it would be harder to get in the upper class as opposed to maybe when you were graduating college?
No, I think it's the same, honestly.
Same.
Yeah, I think there's more opportunities now. I think the competition is a heck of a lot stiffer than it was in my day, but I think there's a lot more opportunities just simply because business itself and so on have become much more globalized. It's much easier to work, remotely or through computers and so on. I mean, when I started this business, there was no, well, not quite. There was really no internet. I mean, there was, but not really. And sending emails. I remember teaching at the University of British Columbia. Somebody said they sent me an email, and I said, so? I'm supposed to find it because there was like some central computer somewhere where you had to go in and log in. And, I just said, why don't you just pick up the telephone? It's a lot easier. But, the point is that, I think the competition is greater now than it ever was. But I also think the avenues for different types of work and the, how do I phrase it, the reception for work from other countries is much better than it was ever before. So as an example, I get CVs from potential analysts from all over the place. I mean, I rarely get them from the US for some reason, but I get a lot from Europe, and a lot from the Middle East, guys and girls looking for jobs as risk analysts and so on. And I have no problem hiring them, and because they can work remotely. So in that sense, it's a little bit easier. But again, it just depends on your field. And, obviously there's been changes.
Very cool. Okay. So we're probably going to have a lot of young people watching this interview. So is it okay if they send you their resumes?
Yes, you can go ahead and send me your CVs.
Awesome. Okay. And while we're on the topic of economics,
Yeah.
what do you think about rates right now since they're so low? I mean, there's a lot of talk that a recession is eventually going to happen, right? Because the market does work in cycles.
Mhm.
And if corporations run into trouble as they did in 2008, do you think the Fed is going to be able to lower rates even lower than they already are?
Yeah, no, I mean, yeah, they've got a little bit of room, and I think this is what happened a year and a half ago, when I don't know if you recall that or not, but the Fed was on sort of a tightening cycle, and the market went into a spasm. Trump got into play, and he kind of jawboned, um, the Federal Reserve to lowering those rates, and they didn't lower them by much. It was a couple of percentage points here and there, basis points, but it was enough to get things going. Other jurisdictions have hit pretty much rock bottom. I don't think the U.S. is going to get to negative rates. Um, and I think they have a little bit more to go. But the reason I'm stalling is I recall about 3 years ago, the consensus opinion was that monetary policy wasn't going to do it. It was going to be fiscal policy. We had to spend. If we're going to grow our way out of a mess or some kind of a recession, then we had to do things like infrastructure plays and so on. And that's starting to come around again, but for some reason that was abandoned, and everybody went back to the monetary policy. And I always thought the central banks were out of powder, or gunpowder, whatever they say. So it's difficult to say. I think the U.S., the central bank's got a little bit. I think it can be effective. Um, but at one point, I think if we do get into trouble, and it won't be the 2008 thing because those are for different reasons, but I think governments are going to have to step up and spend a little bit more. And the thing is, if they borrow, the rates are so low. I mean, it's not really all that punitive. And I think this is the reason why so many governments have been able to take on debt relatively easy over the last couple of years, is because servicing costs aren't really that high right now.
So you said something very interesting. You don't see negative rates happening here in the US as opposed to some places in Europe and even some places in Asia like Japan.
Yeah.
But do you think low rates is going to be the new norm?
Yeah, I think so for a while. I really do.
Interesting.
Yeah.
Okay.
I mean, I don't necessarily agree with it. I wish you can go back 10, 15 years and what Greenspan was doing. And I know you weren't around, but, back in 2004, 5, and so on, when he was lowering rates every time there was an issue. I mean, people were warning you get to a point where, they're going to become so low that it's going to be the new norm. And that creates imbalances as well. I mean, one of the things that, we see a lot is, income from bonds is awful right now, and you really can't diversify a portfolio, even as an individual investor, when the returns on fixed incomes are just awful. They're just so low that they generate nothing. And this is why I think the market has done so well of late. There's really nowhere else to put your cash. You see what I mean? But that's only going to go along for so long.
Especially
All
with quantitative easing, because if you're just continuously printing money, the value of your dollar is worth a lot less.
right? Yeah. I mean, you take this down to a base level. I mean, you look at the price of housing. It's up to where it was a decade ago. It really has. And I mean, it shook out. It was terrific in 2012 and 13, but the prices have gone back up in most places. I mean, you look at the cost of food. I mean, you go to a grocery store. That's insane what it is right now. And people say there's no inflation. It's like, yeah, well, when you strip out food and gas and things like that, because apparently they're so volatile, if you were to put those back in, I mean, there is, inflation in the economy. Is just not in certain things, like electronics and so on. Those things tend to be, cheaper as time goes on. But I just don't know where it is. And I think, this is a mistake that was made years ago. And it's something that is going to be very, very difficult to reverse. You shouldn't have financing costs that are just so low that it creates a lot of, misallocations of funds. It really does. Right. And this is the situation we're in, and I honestly have no idea how they're going to get out of it. I really don't.
Sure.
Yeah.
And you can see how the lower income class would be hurt, right? If they're holding on to cash, especially with an old mentality where you're thinking, I just need to save money, right?
Mm-hmm. Yeah.
And you have saving accounts that are giving you maybe less than 2%. You have inflation around 3%. So you're actually losing money.
Well, yeah, you're losing money, and people don't, and a lot of people, I mean, most people in the U.S. don't have a lot of money to invest after their paychecks. They just don't. And so, when you've got X number of dollars, and I know this is getting into like a home economics discussion, but when you have only X number of dollars and you got to go to the grocery store and feed yourself, and those prices continue to go up, and your healthcare costs continue to go up, and your housing costs rather tend to go up. There's not a lot left over. And again, I don't think raising rates is going to be the be all and end all. But I think if there was a higher cost of capital, it would have kept a lid on certain things. You know what I mean? That's the reason for them in many cases. And I just think it was a genie that was let out of the bottle a long time ago, and nobody's really had the political fortitude to do anything about it. It's a quick fix. So good luck.
So if you could advise people on what they would do with their cash, what would you suggest?
There's all kinds of things. I don't do investment advice over. You can talk to me about political risk. You can talk to me about certain countries, but I'm not going to give you investment advice. I don't think anybody wants my investment advice.
Okay. So going back to the Fed, you brought up an interesting point. There's a relationship between the Fed and, dare I say, the government. Do you think, I mean, some people argue that it's connected somehow. Some people say they're separate entities. But do you think the people in office have any influence over the Fed?
Well, like I said, I think we saw that with Trump, and I think we saw that with the market reaction. There's an independence in the U.S. system. I mean, other countries there isn't, but in the U.S. system there is an independence. But they also have to realize that, if there is, what do they call it, ticker tantrum or something like that, when the market tends to go a little squirrely because rates are going up, I mean, there's not a heck of a lot that you can do. You can hang on there and engineer a recession. And I think that's what happened in the early 1980s when Volcker was continuing to, crank up rates. Eventually, when a recession came about, and it flushed a lot of excesses out of the system. So recessions do have their value; they really do. But I just don't think anybody wants to face that right now. And they've been kicking the can down the road, and I think somewhat successfully for a while now. But again, we've been talking about this for a couple of years now, that a recession is imminent, and maybe it is, maybe it's not. I just, the U.S. continues to hum along, and there's issues in the economy, but at this point in time, we continue to grow. So this formula continues to function okay, I suppose.
Got it.
Yeah.
Okay, and just to wrap up, I'm going to ask you the hardest questions now. So if a liberal does win in November, say if Bernie Sanders or Elizabeth Warren, what do you see happening to the stock market?
Well, it's funny how you say that, because I mean, anything can happen. I mean, you got to assume that they're going to win, and I think that's an issue right now. You got to assume that, their policy positions are going to be the same as they are right now, and those are huge assumptions. But I'll tell you one thing that's always fun, because we don't do this in the U.S. very well. We should look at other jurisdictions and what's happened. Okay, and if you study sort of political leadership or anything like that over the years, and you start to go outside the U.S. to some extent, you'll find that, and Brazil is a terrific case where you've got, where you've had political leaders in the past that have been very lefty in their orientation. I mean, Lula was a great example, where he was a big union leader, and he was going to stick it to everybody that was on the other side of the ideological spectrum. And once he got into power, I mean, things were tempered. You had to. That was what government was all about. It wasn't simply, forging ahead with your agenda and the hell with everybody else. It's about compromise. It's about coalitions, and it's about achieving policy that is, for the most part, balanced, because otherwise it's not going to work. So somebody from Bloomberg, I think it was, interviewed me just before Bolsonaro was elected, and there was all this doom and gloom. Hell's going to break loose in Brazil, and I said, well, the Brazilian system is a little more decentralized, at least as far as the parties go, than the U.S. one. So the coalitions that need to be put together in order to get through anything, or to get anything rather through Congress, is complex. And this is what Bolsonaro, at least on the pension side of things, has done quite well. So, the bottom line is, regardless of who you elect and how, inflammatory, they're going to be, once the realities of governing occur, and in the U.S. case, you're going to have a Congress, presumably, that you're going to have to deal with for most of these things, then, those demands of power, or those, requirements, tend to temper most politicians. And I think this is going to be the case regardless of who's elected in the U.S. And we can see this as supporting evidence in other jurisdictions, whether it's in Brazil or any other place that we tend to look at.
Okay. So it sounds like you don't see a massive correction.
No. No, there's other things involved. I mean, you got to understand, Paul, people really overestimate what a politician can do. Okay? And they do that because the media needs simple things to talk about, right? You've got to have a story that has a narrative that people can understand. People are not going to, read something that requires a lot of thought. So you need a personality, and you need a story or a narrative behind it, and it's easy to digest because that sells newspapers or online subscriptions and things like that. But most would agree, it's like, what does one person do really, to change a country? It takes a long time. Obama came to power promising hope and change. Some things were done, right? But a lot of people also had, failed expectations. That was what I heard a lot. You see what I mean? Clinton was the same sort of thing. There was a lot of changes under Clinton's regime, but he also had 8 years to do it, and a really, really good economy, which made it really simple to get things done. And at the same time, he had a Congress that was much more cooperative than what we have right now. In the 1990s, the Democrats and the Republicans, for the most part, got along with each other. They worked together and they did things. Right now, they just don't. It's become so polarized that it's very, very difficult. So my point of all this is that there's so many different pressure points and so many different realities about government that once, one person, or say somebody's elected as president, there's so many different things that have to be considered, that simply saying, oh my gosh, if Elizabeth Warren or Bernie Sanders or somebody like that is elected, the market's going to shut down and we're all going to go to hell in a handbasket. It never happens and never will happen, because that's not the way power is exercised.
Got it.
Okay.
So, just going to wrap it up.
Okay, yeah. I don't know what's going on. It's, we had a really terrific connection for a long time and it just dropped. Let's see what you can do.
No problem. So we're back on. Dr. McGee, I just wanted to thank you so much for coming on today. I really appreciate your time and all the insight you shared with our audience.
Okay.
If you will, can you share with us your book one more time?
Well, the title was Quid Curriculum, which is Latin for what was. There is a question mark after that. So the idea is that now that we've moved into a world where algorithms, machine learning, artificial intelligence is really taking over, the same thing has happened to political risk. And so, now that we can quantify it, we can at least get an idea of what the relative probability of an event is. It's no longer an educated guess. It's no longer the opinion of just an expert. We can put some numbers to it and make some better decisions.
Awesome. And I hope to get my signed copy soon.
You will get your signed copy. Don't worry. Just send me an address.
Dr. McGee, if anybody wants to reach you, we have a lot of institutional investors that are watching this video. How could they get in contact with you if they have any questions?
Well, they can go to prsgroup.com and contact us by telephone. They can contact us by email. They can contact us by fax. All the different ways. And all you have to do is find that contact tab, if you will, on the website and choose your avenue.
Awesome. Thank you so much, and we'll talk soon.